Start the recording again. All right. So on the daily, we had this push up, really bullish, really bullish, right? We had our last pullback wasn't till like sometime in March, or when we changed structure, we were kind of consolidating for, you know, really we've been consolidating kind of for months. Rolled over into March, saw this push out of it, and then have basically not come back at all. As we go up into, Friday, we had this big sell-off, and so that exceeded the measured move that I had drawn for this leg up. I was looking for a measured move back down, which we hit, and then we exceeded. So this is a big sell-off day on Friday. This was the gap that was not filled previously. So this gap happened on the 25th of May. And so we just soared through that gap. So today, if you look at this from top to bottom, it's almost uncanny, right? Like the 50% of this move, of the entire move, is like basically right in the middle of this gap. So we might wick to this and then hold from this level and continue down, right? So if we look for 50% of the retracement of this move, or if you said, hey, I'm a fair value gap person, like there's your fair value gap. It's right near that same level. And these are, they don't have to be to the tick, but just look at the body of this candle where there was accepted trade, and it's about right for crayons, right? Not using sharp pointed things here. So I'm kind of looking for, what does it do around this gap? Does it stay beneath the gap? And if it does, it's also kind of 50%, or we can see a trade to the top of this gap is 50 or 60% of this move down. And I'll change this from let's see. So yeah, if we hold above if we hold above this gap, we'd have support structure here, and we've got resistance in all of these dailies to push back up. But 60, they call it like the golden pocket, right between 50 and 61 or 2%. That would be the premium short for continuation. And we rejected this high, this all-time high. The next day we have an indecision candle, and then we have a definitive, push down, right? Yeah, like I'm not sure, and then I'm really sure. So yes, decision there. So I'm looking. My bias is short for continuation, because we have. This is your previous. Yeah, so this is another measure move. I'll take off. We have this other, call it all-time high that we've traded to, and we just briefly retested it. Like this, we had a V-shaped reversal on the daily out of it, and so realistically, we've got all this structure that has not been kind of balanced. And even if I look back to when we got this balance, whenever it loads, we got this balance. Here was previous highs. We crossed through it, right? So previous highs, and traded up to a new high, failed off that high, came back and traded into a range. So we will delete that now. If does this look similar? Does this, like this structure, look? You've got a peak, a pullback, a push up. It looks very similar, right? You got a peak, a push up, a pullback. We could see 2 or 3 days of trading around the gap. That's not what I wanted. Could see a couple days of trading around here, and then we've got a shoulder ahead and a shoulder, right? So we could chop around in this range, maybe overshoot it a little bit, but I'm looking for a bit more of a deeper correction, probably down to this previous level, and that would be the market replaying itself, right? Here's a level, here's a level, here's the retest of the high, failed off of it, big pullback. We've got this, a big pullback, recovered, held, and then a deeper pullback. So it might trade into this today, and over the next week or 10 days, we might see another attempt at it before we see it fail. But I think given the strength of this push down straight through all this other supporting traffic, that we'll see. I mean, one of two things happens here. At the gap level is the important level for me to watch. Is we either see this gap, trade through some of this gap, because there's very little volume and very little structure. All right, so there's very little structure in here. There's very little volume. There's not much above it either, to be honest. Like this whole area, because you've got all these wicks. So this big, kind of desert, no man's land here of between these two price points. They need to trade and fill in the structure here, which if I go back to, when it was doing something similar here, you had the same kind of profile set up. You have all this, all this volume. You have a gap as it's, you had a gap here. It had not, and it went back and filled in all this volume after. So, right. So you had a gap up. It goes and fills the volume in, defines redefines the consolidation. More volume here. Now you've got more volume that's traded around the gap, and then it ends up failing, right? It tries a third or fourth time. So one high, 2, 3, 4, real good close attempt, and then it fails down. So I don't know if we're going to get it today, but with this strength, my bias is short for probably the next couple days. I want to see today we could hold here and trade back into this range. That would be one play as we trade back up to 50 to 60, some percent of this move down. But it's going to be my trade ideas are going to be set up around the importance of this gap, and I'm going to have the bias of short. So I'll look for, on the 5-minute, I'm looking for, what do we do on this level? If we accept back into this range, then I would take a long from range to range, right? Because we will likely trade from one end of this to the other. This is a point where we might see a fail, like midway through this consolidation. I kind of expect us to spend more time here. So the same thing happens, like we traded down, there's consolidation. Last night we traded through it, and then we consolidated again, like replayed some of that. Came up, failed. And this is a similar pattern we just talked about. Set a high, came back down, tried, failed down further, tried a second time, a couple more times, and then finally broke through it. That's consistent when you see, volume. There's not much here in between, so I would expect us to retrade this. Even if we're going to take the top of this gap, we might come back down here. Look here at the 300 level, which not much volume. Bigger point of kind of pivot, right, where you've got all this resistance. I mean, this level was drawn from back over here on the hourly, and it's respected it pretty well. Traded through it. We haven't retested this level, so even if we're going to go long, I would think we see 300 again before we keep going long. And targets to the upside, top of this range, up to 850, right, in the middle of this consolidation, maybe a little bit lower. That's the upside target would probably be here. I would be shocked if we, continue to, yeah. I mean, not the number of points, but just given the trend that we're in, and given the the 50% of this push down. If it's an invalid candle and we're going to trade day to day, or candle to candle, we could, so if we, on a daily basis, if we get a move up like this, the next day we pushed a little bit higher, the next day we retraded most of this big move candle up, right? But on this daily time frame, we've had almost no volume here, very little volume here. That's why, and we've still got some down here, but there's volume because there was previous trading. So even this move out of the low, that recent pullback, we haven't replayed any of this, any of this range, and that was all-time highs. So we have no history here, all the way down, really down to here. You look at the volume; it's tiny. Even the recent volume here, I mean, we spent, I don't know, July. Now this was July of last year through March of this year. All right, so you've got 6 months of data to give you this volume. It might load, I don't know. But you've got, October, you had this range trade. That range trade for months, right? And then you got the inverse head and shoulder down here to take you back up. And then you had this trade, really this range for 6 months too, before you kind of had the test and pull out of it. So we won't skip an entire range step up, right? We won't skip another, let's see, 400 point range, 500, right? 400 points, 27, 26, no, sorry, 1200 point range. Like, what is this range? Uh, 3,000 points. So, and maybe we're probably call it 2,700, really, because I think the range is probably here to here. But anyways, yeah, 27 to 3,000. So, if you take it kind of from the top of this range to where we are, I mean, yeah. So I kind of expect us to trade in here more, right? This is the overshoot. Trade in this range some more before we accept back into this range. Well, then we probably make an all-time high again over here somewhere in October, and then trade back into this, for the coming out of the holidays. So that's why I had this bias that we, not just we were overextended, we had 10 or 12 days straight of green days, but this is why I was looking for a rotation back, because the market is cyclical, and we haven't retested it yet. So we could see another test up here, but this takes weeks to do. High, played around the high for 5 days, then failed down off of it, similar to a candle like this, then retraced some of it, 50% of it, and then then failed, and then the next one said up and found the bottom, and we equal body here. Again, the next day down a little bit, opened, tried to go higher, couldn't, then pushed down, another big push down, and then a similar pattern kind of unfolded where we just started kind of day to day, big day down, smaller green day up, then a bigger one rematch. This time we held and then made a new high versus the wick on this previous day, and then we got support off of it, right? And then, but rounded support, and then when we failed back through this level, then it became resistance, and we couldn't get back above it. Came through here, and it was like, a tighter consolidation range, and then we gapped, retraded the gap, tried the highs again, couldn't take it, failed, and then really then really pushed down and found support basically at the previous all-time high, thereabouts. So that's this morning is about watching there's a couple levels to watch: the gap, how we hold. Do we trade back up to like 800, right? This somewhere in here, 800 probably. Where we've got some daily, you've got wick here, wicks here. You've got kind of a pivot level here. So 780 as maybe an overshoot of the gap for a fail back down. But yeah, I'm generally short biased, but generally looking for some shorts. I might take a long going into the open. We have not come back and retested 300, so a push back down to 300 would be good for picking up some more contracts to go try and take the gap out. It's ironically that's about an equal move, 481 to 380, so 180 points in that direction, and call it 180 points is like 660, right? So we're kind of in the middle right now of two areas of interest for me: the top of this gap and then kind of an untested support and resistance band here at 300. So that's what I got. I wouldn't probably take longs off of this yet. Got consolidation here. You could, yeah, the next long pullback for me, if it's going to stay long, would be 300, and you could short off of 540, short off of 630, and then if we clear this, then this could become support here. But I don't see anything. 840 would be about the 840 would be the top for me. We got 850, this volume that's here, and you've got consolidated, the middle of this consolidation. That's what I'm seeing. Yeah. So, I mean, the market in the smaller time frame, you could have, you could push all the way up here and just wick off of it, and that might look like fairly normal trading here on the, on the 1 hour and the daily. It would probably be as a wick depending on the volume that's traded between them. So, but that's what I got for this this morning. I'll leave it on until maybe 15 minutes before the open, and then I'll kill the recordings and stuff, or maybe I'll leave it on to the open. We'll see. Anytime, man. I'm happy to share. I'm not right. I'm not right that often in the timing of this, but the long-term bias plays out pretty consistently. So yeah, yeah, and I caught. Oh, the move. Oh yeah, this move down. Yeah. Yep. Wednesdays are, I don't know why, they just seem to be the days that like, I don't know, Wednesdays seem to be the bigger pivot days. Like, here's a Wednesday, right? Yeah. Yeah. OPEC on Wednesdays. I don't know, I just found that Mondays are like, it's like spring flowers on Mondays. People are like, ooh, let's buy this, right? They just like irrationally just buy it a lot of times on Mondays. And then Tuesdays, it's like, oh, the world's not so great. And Wednesdays, like, the sky's falling, and Thursdays, like, people scratching their heads. And then Fridays, like, oh, it's the weekend. Try not to lose everything on Friday. Yeah. So yeah, we'll see what we get here. Yeah, I had a good feeling on that. Maybe not exactly this level, but just that we were due for some balance, and we got this huge push down. So 50% was kind of in somewhere in here. I think when I drew it out. Maybe I'll take a minute to Dids ask a question the other night about how to like when to take entries, or how I form an opinion on taking some entries. And Dids, I don't know when you came in, but if you rewatch this, I gave kind of the daily breakdown as to how I'm looking for, or kind of how I'm looking for areas of interest for me. And then I'm okay if the day turns out to be a recovery day to take longs, but I would be looking for discount buys at 300, which is about 180 points down from where we are, with a target of 664, which is 180 points kind of north of us here now. Because I'm looking for continuation back down, or to have the daily close more as an indecision than. So we could see wicks up on the daily, so we could trade back up and close. We could have wicks up to this support resistance area at 800, 780, and then I would like to see, even if this green bar is like this, see a wick up here, and then have it close back down here, preferably below the gap low. And if it does that, then I think tomorrow's trading would open and start to push back down. Maybe we get a wick up here, and then another body, and then start to move back down. So you caught some of that. That's given me my bias, which I can change it if we start to see us trade back into this gap. We could take the ride through the gap. The gap was. I'm recording it on YouTube, so I will share the video on YouTube for you, so you can watch some of that. So I'm the area of interest for me is the gap that we had before that we filled, and so I'm looking for what does price do around the edge of this gap right now. It looks like it's going to go test it going into the open, and so I could take some. I could take like a sell here with a stop just outside the range on the open. I need to stop my bot. Hold on. my bot is cleaning up my orders. It's like I didn't place those orders. All right, so could take a position like this. It's a 36 to 60. I can't read 682, so 50 points of risk. So you size appropriately. Could take one here, failing on this level, back down to 300. 300 is the area that I have as my. I was going to take a buy, it'd be at 300. So, and I would probably take this one with a little bit larger size because we have actually like 280. Right, so we have this level that was traded through, then acted as resistance 1, maybe 2, 3, 4 times maybe, and then we passed through it, and we have not retested this level for support. So this might not come into play today, but if I was to take premium buy, this would be the premium buy for for a trade back up to, call it 850, right? So 300 to 850. That might be most of the daily move, but that's the A plus right there. Like what we're given right now, that is the A plus. And this level was drawn. I didn't just draw it here. It was drawn from. I go back over here. It was drawn from this support and resistance from before. So I had an area of pivot. This might have been. Yeah, I mean it continues. So this level's been of interest on the hourly for pivots for a while. And now we have not retested it. We've just run away from it, which can happen. But usually if you get this much, this much support and resistance pivot, and it's been fairly recent, as of 2 hours ago, I would expect us to see, if we're gonna go make a big recovery move, I'd like to see us come back and just retest it once from this breakout, because we haven't yet. Otherwise, I'm looking for short setups. What gives me confidence that we're going to roll back over. So I'm not going to be married to the short bias. I've got one sell in here that's maybe a little bit safer, and stops outside of this range. This is just the gap range, and if you look at gaps, they usually react the first time they're retested. And this gap, it never got retested until we blew. Yeah. So we're about to get into the range. If we get into the range, then usually, if we don't reject off of it at the open, then we'll probably trade range to range, like end to end of that range of the gap. But I do expect the edges of this usually act as an area of interest. So maybe we'll take it 650 with a 40 50 point stop. So again, size appropriately. If I got in here, my stops would probably be down here. So I would look for probably try and get in here. We're looking for a little bit of an overshoot of the level. And I'd look for, that's kind of the way I would set this up. And my average entry, really looking for 285, the low of this range. And it looks like we might get into this. So for a shorter, like if you were gonna be a bit more, scalping, you could look for a long here. I just look for the my entry on continued move is just a pullback to where you've got equal bodies. So this would be one right here. This would be one right here. And we don't have one in here because we haven't, I mean, the last pullback was here and a push up. So I'm looking at this for support and resistance. And this is kind of the middle of the consolidation. So it could be one. I think this is the kind of the top of the consolidation. I wouldn't expect this to hold that long. So if you took one here, you would need to trail or plan to take profits maybe in a smaller range than if you get into this position. So I'd be surprised if we shoot straight up, or if we shoot straight up and we have no structure, then that's supporting the short roll back over for shorts. But on a shorter time frame, I'm looking for definition of like direction, and sometimes you don't have it. Like, hey, this looks long, and we pivot around. I think we were in some shorts last night in one of these moves. I think we took another short. We took a short trade here that I think targets were down here, and it didn't get hit, and we got stopped, and then took a second short, and then hit in profit overnight. Yeah, one of these trades right here. And now we V-shaped out of it. Got a, formed a head and shoulders, inverse head and shoulders here. And then that move finished up, and then we consolidated. Now we're breaking, we're breaking from this. So the trend is, the shorter term trend is up. Both the 200 moving average and VWAP are trending up. But have been, have been down for a while, right? The VWAP's obviously resetting on this session, but so those would be areas of interest for me. So that'd be, those are kind of what I would look for. Shorts off of the 680s, 670s, and stops at 700. We could. I was talking to Migs earlier. We could see 800. We could see this next level, or 850, the kind of midpoint of consolidation. But I don't anticipate it based on the daily. I don't really anticipate that much of a move in. $850 was here. We could see it, but I would. It might be an area to look for, kind of premium shorts, right? If we got premium buys down here, I think they're premium buys. Premium shorts would be up here in this support and resistance, or mostly support at this point. It has not proven to be resistance, so it could overshoot a little bit with a wick on the daily. But I do expect we see something. I would expect something more like this, or more like this on a day-to-day. Candle kind of looks like this, so wicks up and then ends up trading back down to the midpoint or below the low of this daily candle. But the wick could come all the way up to here. I mean, could trade up here and then turn around, right? So if we think about like, daily sessions where we, dailies where we open. That's the afternoon. Here's the opposite of it, right? We sweep, 9:30, kind of not sure where we want to go. We sweep and then we reverse, right? It's kind of what I'm thinking about. So All right, we got 15 minutes to the open, about. Mm-hmm. Yeah, I think I did this earlier. I think the fibs, if you use fibs of the body, you could come all the way up to 804 to get into that golden pocket between the 50% to 62%, right? So this is larger size. So it could be invalid until here. I mean, but I would be looking for shorts, not trying to catch the top of it, but that I'm looking for shorts. But we could, before we get there, come down and retest one of these levels to push up, then to push down. So I only need to catch one leg of this move. If it's several hundred points in length, that's the only thing I would need for the day. If we come up here and I see it fail, I might take a short position on a live account to hold it until to see the close, or hold it intraday. I've already got the other position that I don't need to have more on the same bias, but I might take it in a different account to hold until tomorrow or Wednesday. Yeah, yes, it's if you're gonna play, I mean, one micro, you're talking about 100-point move, 200-point moves in either direction. With just tighter stops, well, not tighter stops, but smaller size, so you can give it more room in the stops, and then have reasonable 200, 300 point take profits, and then I was talking to Eric last night, and if anyone traded the volatility during the tariff times in Q1 of, I'll go to the daily, Q1 of last year. Oh my God. Uh, yeah, this is, yeah. So we entered like, these were, yeah, this was April. So, I mean, like, what are these days? Oh, I can just look. Can't really read it. The high, I'll just do this instead. Yeah, 871 points. And that's a random Wednesday. And then this one's 672 points. Like, these days happen all the time. 700 point day, 700 point day, 700 point day. 1,000 point day. All right, so like, here's another one, over 1,000 points in a day. And then all the way to April, and that's 1,000 points. That's 1,200 points. This one's 1,500 points. Like, so 1,800 points. This one's 2,500 points. Points, not ticks. That's crazy. So, trading through this, it was like, and if I look at this on the, just the 30-minute. Oh my God, where am I? Hopefully this will load. I've run out of data. I was hoping to show it to you, but you can go look on TradingView. Okay, so I can get March. On the hourly, I mean, look, there's an hourly candle. This is 7 a.m. Right, like this is before the open. Look at this move. That's an hour. I mean, stuff like this was insane. It was happening all the time. 876 points in a 1 hour move. It's like, yeah. So I don't think I traded anything larger than like 1 or 2 micros in this period of time. But I had some days where I, hit 100-point stop losses and then hit 400-point take profits. And you might get that move in like an hour or two. I mean, these weren't even, that's not an open candle. And there's the open. Like it was like nothing. Here's a close of the day. So, market on close, 300 points in that last hour. So the point of that is like there are times you have to think about market condition, and we're in a I would say a turbulent market condition right now. Interest rates up. The war in Iran, still the war in Ukraine going on. This one has more impact on gas prices, and then you've got major commodities, and then you've got a bunch of other random geopolitical stuff going on. Some conspiracy theorists talking about things, but so seeing 74 high to low, this 510 to 360, 150 points, like that's half the volatility versus what we were seeing in like Q1, Q2 of 25. So recognizing it's more volatile given a big move and some of the geopolitical things. Like this is the last several days been pretty reasonable trading days, even though they felt choppy. If you're trying to force something into a trade, then you might get beat up as these just kind of go back and forth. If you're a bit more patient to try and find some levels that are interesting, and then you just build your trade idea around a level, and this is opposed to like looking, being microscopic into one of these candles, then it makes it easier to trade. I think you can still be wrong. You could say I was looking for a long here maybe, and I didn't think it was going to come down here. And when this, maybe I bought the third time and got stopped out. And when I see it come down here, and when it rejects this level, then you buy here, and you're like, oh man, look at this price. I was here, and if I tried to hold it through this, that's a lot of drawdown. I don't need to do that. I can kill it, see it come down here, re-enter, and say, okay, now my hypothesis is that this level holds. I have all this support and resistance, and this level holds. Then I might get in a little bit later up here on a 5-minute, and my stops go back down here. And it's like I can kind of maybe find an edge. And if it rolls through it, then you trade the short between the two levels. So my entry bias is really I would like to see this long be picked up to come up here and fail at 770 or 850. Maybe we see 900 to fail, but I think we would come back down even at the open. Like, do we wick up and then sell off, or do we come down and then push up on the open? It looks like we might just go up. And then we've got 8 minutes. 8 minutes to see what happens here. My these stops might be too tight going into the open. Let's see. What's volume look like? So volume is still increasing into the open. So 7 o'clock we started to see more volume come in as other traders in the market, in the regular market, can a lot of brokerages give you access to 7 a.m. for the pre-market session from 7 to 9:30. So there's that volume will increase the volume here too. Yep. So almost time to get the party started. Oh yeah. So volume comes in. The American stock market opens for most brokerages at they they haven't. I don't think they've yet turned into 24-hour trading days, but you've got over the counter markets and other things that will take orders from people, and if um, they don't send them to the exchange. So before the exchange opens, brokerages for most people will start taking regular stock trades that you want to place at 7 a.m. Eastern. So you see an uptick in retail and other trading at 7 a.m. And when you start to see that money come into the market, you start to then see money come into the futures market because you're having volume go into like the Mag 7, you're having volume go, like people are trading in sectors and industries. So as people start trading at 7 a.m., you'll see an increase in volume in the futures contracts too. That's why you see a spike at 7 for the 7 to 9:30 is a volatile market that you see. I can't type this morning. You have kind of pre-market, right? So the regular hours is 9:30 to 4. The pre-market is 7 a.m. to 9:30, and then after is 4:30 or 5 till 9 p.m. But you get like you get a ton of volume that happens. These are all pre-market stocks that are trading high volume or high, like where's volume most active. So this has already happened before the market has this is all volume that's happened from between 7 a.m. and 9:30. 77 million shares sold traded. I think this is shares. I don't think it's dollars. So AMD's open down. I mean, that was Friday. And then I think, let's see, extended. So this is the 7 a.m. This would be the end. 4 a.m. it opens for a lot of people. 4 a.m. it technically opens. It's extended. 7 a.m. it opens for most retail trader brokers. Allow them to start putting money in. But at 4 a.m. you even see a gap. I mean, this gapped up, and then you didn't see futures gapping up. The futures traded, in this period of time, and then at 4 a.m. Eastern, the market opened, and you got, it then reflected a gap because the valuation of where this was, the futures market and the markets are based on they have codependence, right? So you price futures based on the index fund of all these other underlying stocks. Well, the futures trade all night, and they were trading up, and so people just remove, like, if they have orders to sell or buy, those start to move up even though there's not trading activity on exchange, and so you get a gap. And in regular stocks, because of the closed session, you're going to have gaps more frequently, and they're not nearly as significant. But Like here's one, a gap up, a small gap here. It's more common when you've got the closing session. So AMD looks like it's already tapping into this consolidation and a volume shelf here that it's tapping into that it, again, could reject off of. So that's the volume I'm talking about. You see an increase in volume at 7. When you get more, that's the rest of the retail traders dump in, and all the algos have been open and trading, but most US brokers don't open until 7 a.m. Eastern. I think they're going to change that, so we might see more balance in liquidity and like volume happening less around like specific hours based on markets going to 24 hours a day. Uh, oh man, 600 right in the middle of that range. I wasn't paying attention. I don't love these buys. This would be the safer buy. I think we'll trade back through that level, and then where would I put my stop? No. I just that if I was going to take one here, I had one here, one down here. These would be shorter term. If I were to get into this position, I would want to take profit like fairly quickly. And so, did we overshoot this level, the gap, and we're below it, or are we gonna trade inside it to the range? And did sometimes if you're looking for continuation, you can, I like the body for a retest. Sometimes it happens at the wicks, but not going to always be precise. I think my entry originally was here, and then I had one here at 430, and then this one, it's not as clean, would be 492, but it stopped right at 500, 29,500. So let's see if we get a short here or not. It's a counter trend on the shorter time frame. I think I'd rather take a long with this structure right now, but longer term bias is still short. The volume's there. Volume's pretty high. Now, okay, so here's what I'm thinking based on this price action. I'm gonna give it another. Gonna give another 3 minutes to see where the body closes on this candle, and then if this breaks structure, then I might just take a short on it. If it finds a level and holds, we might take a long. But on the next, like right here, right now on this candle, if the body closes outside of this gap range and we retest the gap, this level, then I might try and sell off this level. Man, I think that thing traded like right to the center of this gap. Like, It's pretty close to 50% of that. So idea is right, rejecting off the gap. It just I thought we might take the full range. All right, so let's see if we get, do we hold here? Do we hold here? This is like idea number one. Yeah, if you rewind, you go see all the levels. All right, so this got into one. I got into a long, I'm playing out like hypothesis one, right? Which is this level that we had not retested yet, and this one I wouldn't hold this one that long. I would probably just take it back to see if it trades back to the gap, the edge of the gap, and stops are fairly tight given the like risk to reward on this. So looking for the range to hold. And trade maybe this trades to the high volume here, or maybe it trades through it. So we might do this. I might take one off at the consolidation if it tries to retest this. And realistically, I'd probably, given the time frame, I'd probably start trailing. I'd probably start trailing after this next candle. So give it about 4 more minutes, and then might manage this trade a bit, rearrange this, maybe not take a buy here, another buy. Just put our stops down here. So I do think we'll come back down here to 300. Just where do we go first? So do we come back up and retest this gap first? Take one off there, and then or this could roll over today and just continue going down. Right, on the daily, this could have been the wick. We could have posted the wick already. Not had significant volume on the daily. So we'll that might be enough of the wick. I really thought we'd trade a little bit higher. Yeah, volume is overall negative on the open candle for our first 5 minutes. Let's see if this closes green, and then we open at the next candle maybe around 50 and then trade back up. Do we trade? Oh boy. We trade up here. And then maybe we get the next candle open and trade back up here. These boxes don't have any significance. Just kind of what I'm thinking. We see the body, the shapes of these candles look like. I think maybe we take this. One minute to the next candle, and then I will start to manage this stop loss a bit more. If this closes very close to my entry, and the next candle body doesn't open, I might just kill this one and look for this better entry at 300. If this rolls over, there is a short you could take from 80 to, so you get about an 80 point short back down to 300. Yes, exactly. So you would wait for this to trade through this zone, break away a little bit, then retest, and then you take the retest short. So I would like to see this recover some more. If this continues to hold below 450, 470, somewhere in here, it could fail. We should paint a body through it, so that there is a little bit here. There's a little level here somewhere that it needs to hold above. And if it fails again on this one, then it's kind of minor, the 50s. But if the body holds above here, then this long should still be valid in the shorter time frame, right? So I do think we'll see New York still has to set its initial balance and figure out which direction it wants to go in today, what color hair it's going to have today. Yeah, 72.50. That's right. That's right in here. You've got some support, some resistance, some support. All right, let's go. So we closed above it. Let's be still reasonable. Let's see. Could come back up and try to take this out, and then fail up here. So now to me, I want this to close. We got 3 minutes for this to close, but I don't think this is going to trade. If we break through this again on this, even on this candle, I wouldn't give all that move back. So let's see. Could take out the first one of these contracts. I got into 2 down here. Oh, come on. It was so close. Are we going to pivot again? Are we going to shoot through it? let's see if we trade up to 81. So two micros. This is $435 on this entry. It was. I mean, maybe even a little bit higher depending on if you got out up here, the gap level, the gap low level. Again, it for whatever reason, for some period of time after, the gap level provides some significance. It's essentially like a settlement open and close, even though the exchange does the technical settlement level. NVIDIA looks like it's gonna roll over. Look how thickly traded NVIDIA is. Just like a flat wall of volume. All right, so I think we're okay. I think we're okay to have it retest this level one more time. Maybe I'll just take one out at. I kind of believe it's going to come back up here. Figuring out where your take profits goes. It's similar for me. I haven't drawn a support and resistance. I bet we have something similar there. So this is not the body I was looking for on this candle, but effectively we got it here. I was looking for this one to close a little bit higher and then have this one open and trade up from there. Similar to how this one is setting up, where we had a wick where it tried to go and couldn't do it, but then the body opened on the next one. Didn't want to go any lower and giving us a little bit of continuation. It is a little bit of a slow open. 177 points on the open candle. It's not. We had some pretty. We had some other moves at 7. And we've had some of the. I think maybe some of the NY moves played out already. Yeah, you could have basically just bought it in the Asia session and still just held it. Oh. All right, so locked up at 1500 on that move. So it'll be 150 on 2 micros. That one peaked at like $300 or $400, maybe $5,000 for the 2 minis. But that is how it goes. Yeah, it hit my stop loss. I mean, it could overshoot this, but I think, we're seeing equal body rejection. That's like that's a rollover signal for me, where you get 2 equal bodies, and then you've got a lower wick, and we've got that little support and resistance here, so it's okay. See what the next, we're 9:45 Eastern. We'll see some more volume in like the next 5 minutes, going into the end of the hour. But I'm gonna stop recording this one, so just maybe I'll see if we get one more trade setup idea here. Yeah, it's well, I think if we see, push down beneath and hold, but beneath here, really down below 378, that's the premium buy zone for me. So I could just leave this and wait and see what happens later. But if you wanted a short here, expecting the daily candle, it's higher time frame. If you're still on the bus with me, expecting that we see a bigger wick, and then the open for tomorrow to open here and kind of continue down is what I'm thinking. But we'll see what unfolds. Yeah, so there's a short here playing out. If we stay beneath here, take this level out, then we've actually changed structure. So this is a pullback, kind of a consolidated pullback, or a little bit more consolidation, and then a push up, a little pullback, push up, failed to make a higher high, made a lower low versus this one, lower high. See lower low here. If we get this lower low and break through here, then we don't even have to wait for that confirmation. I think we see it fail beneath here, or pull back up here, and then sell here. This is an early sell. Don't do this. Don't do this. Too late, all in. Yeah, would take a sell on that. This thing, yeah, it's got 150 points in it to the downside. I think if we clear this level and clear the next level, then 300s. All right, and my stops are just going to go up here. I might take profits. Safely just trading. Let's see. Full move would be back down here. The first one that it might test and fail at would be here, so and my pivots really up here. Okay. So I'm risking what you would call $300, $280, $281 to make 700. That's probably a bit of a stretch, but realistically 450 and 7, so $500, 280 to make about 500 on this move. That's why I said don't take it here. That's the pivot point right here. This is your sell. Your sell is the fail of this level again, right here at 54 or maybe 50. We just don't want to see this make a new high here. And breaking the rules. Wait for the candle close. Let the body tell you the story. See, you don't look at the hands. Those jazz hands have you distracted, but the body tells you what its intentions are. I might get one more. Maybe we get one more entry here. It's all relative. I mean, if you've got if you're trading with enough buffer, then it doesn't, you know. Well, I was telling someone yesterday to, when you trade a practice account, just trade it. You trade it the same way, but maybe you trade it with different size contracts to get used to it. So if you're thinking about going into NQ from MNQ and your position size is normally 3, 5, or 8 contracts, like trade one or two, like start trading one or two, either trade the same number of contracts with a different product, so you kind of start to get an idea of it, or you trade, um, you know, like just you can use a practice account to get comfortable with the sizing in terms of, you might take the same move on MNQ, but if you take it at NQ, yes, like I can't take it with the same size. What's the drawdown potentially going to look like? So that can help you get comfortable with it as you continue to grow your 50K account. Because you don't have to go to NQ. You could still trade MNQ. So that was kind of a preemptive sell, which took some heat on it, right? Um, yeah, I I recorded. I turned this on. It's been on for about an hour, just talking about market structure in general for the day today, as well as like my short bias and the positions that I looked at for interest entries. Um, I didn't take the trade around it. I took a long that got stopped out on profit. Um, I just so one of these short contracts just came out in profit for $2,100, so 210 on MNQ, and then targeting 310 for this a full take profit. If we fail below this level, this is a short. If we can close below 375, 380, yeah, I think we can. So the bias of the gap, the edge of the gap range, or selling close to the middle of it, was the premium entry. We didn't take that one. We took a long, then we took a short This one was a little bit preemptive. We should have waited for it to retest that gap level, but that gap level was played out like really nicely. Couldn't find support above it. Retested it a couple times, failed, and now the short bias play is kind of unfolding for us. I'm going to add to this position when it retests. Yeah, right here, right now. Okay, I got it. I got a second entry, or an added to my entry, and then I'm going to take a third add as it trades back through this range. I do want to see this. These are early. I really should wait for this candle to close beneath here, and then retest into this level for a sell. So I really want to see the body of this candle close. 1 minute, close beneath here, and then retest the top of this range again, and get another. I don't need to give it that much risk anymore. Okay, so we're closing beneath here in the next minute, I think. And so now give me a retest. Add one more time here, and then maybe we add one here on the way up. Retest this, or the middle of the consolidation again. Come on. Retest. Yes, it is still being recorded. Yeah. Yeah, don't trade like this. Don't do this. Wasn't a great, this entry, the first entry that of those two positions was not a safe entry. It took a lot of heat, but I mean, that's more experience and kind of expecting, or not knowing where, but having an expectation of where it was going to go. But the premium entry was really, for that short, was really like 36. Someone was detected at your front door. You noticed the door was wide open? So got another one added there. but post a loss on this one. Good entries up here. A bit aggressive ones here, didn't get the follow through. Gave it the space to validate it. Could have probably taken in profit somewhere in here at the retest of this level a couple times. Didn't take the profit off. Would look for, wait to see what candle structure gives us here. If it rejects or if it accepts in the gap range, then we might get the pivot back through. So this could be a push up and not as healthy a pullback as expected, but could be the pullback we need to trade back up into the gap range. If we reject off this gap range, I do think we will go back to 300s or below.